Hello, everyone. I'm here with Taj Singh, President and CEO of Discovery Silver. We're doing the backstage interview for the Silver Investor Forum. Taj, thanks for your time today to dig a little deeper on Discovery Silver.
Thank you for having me, Peter. Good to be here.
So, Taj, let's dig in a little bit. Discovery has the 100% owned Cordero project, and it's actually located close to the prolific mining belt in Chihuahua State, Mexico. Can you tell us a little bit about the history of Cordero, how it ended up being part of Discovery Silver?
Cordero actually is, yes, located on the Chihuahua Zacatecas gold silver belt, which is one of the most robust mineral belts in the world. Cordero was discovered by Lavon Resources in 2009. And over the next 10 years after the discovery, Lavon spent over $60 million, mainly on drilling, over 130,000 meters, close to 300 holes, as well as obviously, as well as spending on engineering studies. But through all this work, Cordero became and still is the largest undeveloped primary silver deposit in the world by silver resources. By mid-2019, Lavon was looking to put the project in the hands of a company that could aggressively advance the project towards a construction decision. And so that's when Discovery acquired Lavon Resources to become the 100% owner and operator of the project. Discovery went public in 2018 and had a suite of exciting early stage, very high grade silver, zinc, lead properties in Mexico, some of which had significant past artisanal production of direct shipping ore. Discovery had a very strong technical and Mexico-centric team, having advanced multiple projects from exploration all the way to construction and operation in Mexico in prior companies. Discovery was cashed up as well, and obviously being part of the Oxygen group of companies had a strong capital markets backing. And since we've taken over the project almost 2 years ago, we've consistently and successfully executed on our plan for Cordero, and that's shown in the healthy share price performance of the company. But we truly believe Cordero is emerging as one of the most significant silver projects on the planet because of its rare combination of margin, size, and scalability, which is very hard to find in the silver space.
That's interesting. In fact, so that actually was going to be my next question. You're talking about the size. Can we look at that a little bit more specifically? What is the size of it now? The grade of Cordero, sort of, I guess, maybe overall, and where you think things are headed?
So the total global resource in the last technical report, the 2018 report, resource estimate was over 1 billion ounces of silver equivalent at a cutoff of 15 gram per ton silver equivalent. That's 600 million ounces of silver alone. The 2018 PEA pit was a subset of that total resource, and that was done at 20 gram per ton silver equivalent cutoff. Contained about 400 million tons of ore, and impressively low strip ratio of 1:1, a relatively low average grade of about 45 grams per ton silver equivalent. So the main focus of our 75,000 meters of drilling since acquiring the property was to define and delineate the higher grade portions of the project, mainly above 50 gram per ton silver equivalent or higher. The high grade pit would then sit within the 2018 pit, and we're really focusing on grades of 2 to 3 times the head grade of the previous study. So that gives you some ideas of the direction we're moving in. Our high level target is to produce a project that gives a minimum 15-year mine life with an average production of at least 15 million ounces of silver equivalent a year and cash costs in the lowest half of the industry cost curve. And at that production rate, Cordero would be amongst the top 5 primary silver mines in the world in terms of total production, with the very realistic ability to scale up to being probably the single largest producing primary silver mine in the world. And we feel if we can outline a project like that, this is no doubt a tier 1 silver asset. In addition to the high grade pit I just discussed, which we believe is a very strong project at $17, $18 silver. It's a mine at those silver prices. Cordero also offers unparalleled optionality in that outside of the project that we plan to define in the PEA, there would be hundreds of millions of additional ounces already drilled off that would come into a mine plan at higher silver prices in the mid to high 20s and beyond. And simply isn't another asset in the silver space that we've seen that has this kind of torque.
Well, that sounds pretty exciting and pretty rare for the silver space. Like you said, you don't come across too many of these primary silver, these kinds of primary silver mines of this sort of size. What's the approach? What's the difference in the approach you've taken to Cordero versus the previous owner, Levon?
So the previous operator, Levon Resources, had, what you might want to call a bigger is better approach. They really tried to make Cordero kind of a Penasquito style analog. And we know that, Penasquito is one of Newmont's largest producing mines, even currently. And in the early days of Cordero, there were many comparisons made between Cordero and Penasquito. Penasquito had more gold, Cordero had more silver, but the overall precious metal content by value was approximately similar. The base metal content was approximately similar by value. The deposit style and mineralogy were quite similar. It was located on the same belt. So quite a few parallels. In 2006, Glamis, which was a Goldcorp predecessor, they bought Penasquito from Western Silver for $1.2 billion. That's when gold was in and around 500, silver was $9. So Levon was going for this approach. They saw the value that kind of asset could be worth. And they were really going for that. Very, very large tonnage, low grade, low strip, long mine life, but relatively large capex. Needed a 40,000 ton per day mill to start with. We have a different view on things. We're taking a disciplined approach to the asset. We call it staged approach. We're prioritizing high grades, low strip areas early in the mine life. So using, cutoff grade strategies, stockpiling, our grades will be substantially higher than the previous plan. So the initial capex can be much, much lower. Swift payback, great IRR. The general idea we have is to start around 15,000 ton per day, maybe 20,000 ton per day, less than half the size they started at, and then ramp up the throughput in year 3 or 4 once the initial capital is paid off. In the push to do, to have a Penasquito look-alike, Cordero actually left, Levon had actually left many areas of the deposit undrilled. And that was our opportunity. So we believe the deposit quality has improved tremendously since we've drilled almost another 100,000 meters on the property. So this new study is not only a new way of looking at things, but a huge amount of additional data is being added, de-risking the project substantially. We've almost, again, as I said, doubled the number of holes and meters in the resource versus the previous study. And we've relogged every single old hole, over 250 of them, according to our geological interpretations of the deposit. So the resource is going to be a lot more robust. Lithology and structure will be incorporated for the first time. That will be used to define the resource domains prior to the resource estimation. Previously, Levon used an unconstrained assay cutoff approach. And then in terms of met work, a lot of met work was done previously and showed a clean, simple flow sheet. But we've de-risked this further, and now we've carried out what I would think most would say is a PFS level of met testing. So to sum it up, our approach is more disciplined, focused on capital intensity, so kind of NPV to capex ratio, and then the project will be heavily de-risked versus the previous operators in that the data set across many areas is much larger and more robust.
That's great. So you've got a big drill program for this year, ongoing drilling. Obviously, you can keep looking forward to some ongoing results from that. There have been some recently, which were almost par for the course, quite impressive. Can you tell us a little bit about what they indicate and what they're continuing, or I don't want to put words in your mouth, but what are they shaping for how you see the deposit, taking shape?
So since we've started drilling, the results continue to exceed our expectations. The high-grade open pit continues to expand materially in size, and it's probably 4 times the size it was by footprint than when we started drilling on the project. We're continuously hitting very broad widths, 50 meters, 100 meters, 150 meters, very regularly. And in some cases, well beyond this. One of the longest high-grade open pit intercepts we recently put out was over 400 meters. Just this past week, we actually released a batch of several bulk tonnage drill results, and there was probably 8 to 10 holes that each could have been a headline hole. So that kind of frequency and consistency of our hit rate is very, very hard to find in the silver space. And what it highlights is that Cordero is emerging as one of the few multi-generational mines in the silver space. So that's the key focus. That's the engine room of the PEA, the bulk tonnage open pit, the high-grade open pit. In addition to the bulk tonnage mineralization, we have had fantastic success on the earlier stage exploration of very high-grade veins that traverse the project near, in and around the pit area, starting at surface, half kilo to over 2 kilos per ton, 1 to 3 meters, sometimes even wider than that. There's currently over 5 kilometers of these high-grade veins that have been identified. Historically, they saw some artisanal mining, and very high-grade ore was directly shipped to the nearby town of Parral, decades ago. Previous operators encountered it in drilling these veins, but they systematically were never tested. This is the first time they're being tested and defined as veins. So our drill testing has been very encouraging on these veins, and despite being very aggressive with the step outs, sometimes 200, 250 meter step outs, we've essentially hit every single time. And in some instances, this is going to allow us to expand the high-grade open pit to incorporate sections of the veins. We're getting very, very wide veins, and even outside of the veins, along the shoulders, the wall rock is very well mineralized as well in certain instances. In other instances, the results will allow us to start thinking about adding value in the next stage of the study, the pre-feasibility, where underground mining of the veins should come into the mine plan, which would supplement the open pit feed, and potentially significantly sweeten the economics of the project, especially in the early years. And we will continue during 2021 to systematically test these veins at depth and along strike as part of our ongoing phase 2 drill program.
Super. Well, we've certainly done, although short, but a good overview, I think, of Discovery Silver and what you have and where it's been, where it's going, hopefully. And I mean, I'd certainly like to encourage everyone who's watching this to keep a close watch on Discovery. I think that we've got some exciting days ahead. And if there's anything you want to sort of leave us with that we maybe haven't touched on?
Yeah, final message. I'd say the Discovery story is a simple one. We have a world-class silver asset that will continue to get better as we de-risk and optimize it. We think Discovery offers compelling value right now as there are near-term significant catalysts, and we believe as we execute on our plan, we'll continue to show value that's currently not being captured in our share price through the 2 major catalysts of a resource update and a PEA in the second half of this year. Drill results will be ongoing every 3-4 weeks, both near mine areas and later on in the year and into next year. Our first ever drill testing of very exciting, highly prospective targets on our large land package that have never been drill tested. We have a cash balance of over $85 million, no debt. So we have significant firepower to continue to aggressively advance the project and drive value through exploration and development. And to kind of close, if you're bullish on silver in the short to medium term, which many investors are, there's not many companies at all that have the leverage we have.
Great, thanks very much for that good overview.
Thank you very much, Peter.
Pleasure, and look forward to doing this again.